Did you realize that you can buy gold bars at Costco? But is it a good investment? Well, when you look at it over the past 50 years, it has done very well, but not quite as good as the S&P 500. But during moments of major inflation and downturns in the market, gold has continued to do well. In fact, all precious metals have done well during times of downturns. But a question that I often get is, what are the best ways to invest in these precious metals? And that's why I'll be going over the most common ways to invest in precious metals like gold, silver, uranium, palladium, and lithium. I'll make certain to provide a comparison of each so you can see how they all stack up against one another, and along with some of their pros and their cons. As a whole, I plan to cover how you can invest in precious metals in their physical form like Bullion, the top companies on the stock market exchange in that sector, and also the best exchange traded funds or ETF that are available for investing in these commodity metals. Now, when it comes to physical forms of gold and silver, I'm only going to focus on bullion, or the closest the commodity can be to its raw material with the least amount of transformation. So I'm not going to be talking about jewelry. Strangely enough, you do have the option to buy physical gold at places like Costco, pawnbrokers, coin shops, gold and silver exchanges, and also online precious metal exchanges. And for obvious reasons, uranium, palladium, and lithium are not as easily bought and sold in the physical form. As for gold and silver, if you want to buy bullions or coins in person, then you probably need to live near a larger city that offers access to coin shops and exchanges. And regardless if you live in a large city or a small one, everyone does have access to online coin dealers and exchanges. But the downside is ensuring that you're buying authentic gold and silver and not a fake, which could be hard to do online. And when it comes to selling your gold and your silver, you do have the exact same options that you had in buying them. Well, except for Costco, you can't exactly sell gold to Costco, but you do have the added option of selling your bullion to a jeweler. However, the act of selling your physical gold or silver isn't very cut and dry, because each of these groups could pay you varying amounts for the exact same item, and their criteria for paying isn't going to be easy to validate. For example, a pawn shop may pay you 50% of what it's worth, and an online exchange or any dealer may pay you a fraction of its value, because at the end of the day, they need to take their cut so they can turn around and sell it for a profit. From my perspective, the benefits of investing in physical bullion or coins is one, the ease of access. Most every town has access to buying these types of items. Next, it's a tangible asset that you can touch and feel. It's very real when you can see it and feel it right in front of you. Also, it's a finite resource. We have a limited supply to work with, so the value should never go down over the long term. And the cons? Well, selling can be a hassle. You may give up a lot of profit due to the markup cost from those that you're working with when you're selling it. Next, storing physical metals is a challenge. Keeping it all in a safe place in the house could be a bit difficult. And then, of course, there is the risk of buying counterfeit product. And lastly, there's a limit of the types of precious metals that can be bought and sold. It's true that uranium may be in high demand, but I don't have any bars of uranium just lying around, and nor would I want to. However, there are much safer physical assets to invest in, like contemporary art. It's also what makes today's sponsor, Masterworks.com, so special. Masterworks buys multi-million-dollar artworks and files an offering with the SEC to fractionalize the art, allowing investors just like you to buy and trade these shares in masterpieces like Basquiat, Banksy, and Picasso. So now everyday investors like us can diversify our investment portfolio beyond just the stocks and bonds by investing in art. It's especially attractive when you learn that it's outpaced the S&P 500 over the last 27 years. But with Masterworks, you don't have to be an art expert or to have millions of dollars to invest in some of these greatest artists of all time. They do all the work. And since inception, every single one of Masterworks' exits has returned a profit to their investors. So it's not surprising that over 800,000 people are already on board. And there is a wait list. And with the new year, everyone is starting to get their finances into order, so that number is growing every day. But my viewers can skip the wait list by using the special affiliate link in the description below. Now let's move on and speak to the individual companies to invest in that have a focus on the mining and refining of these precious metals. One of the benefits of investing in a company is that there is no physical asset to manage, and you don't have to worry about counterfeit product. But investing in a specific company does carry a very different and potentially higher risk. Regardless of how long a company has been around, companies go bankrupt all the time. No company is immune to poor management. Trust me, I know firsthand. And a person would think that owning stock in a company that makes and refines precious metals would mimic the commodity that they mined. but it can fluctuate greatly because at the end of the day, it's still a business that has the potential to make or lose money depending on how the business is being managed. I'll go ahead and I'll cover the pros and cons of investing in specific companies, and then I'll list out a handful of companies along with their performance over the past few years. The pros of investing in stock of companies that make and refine precious metals may be potential for higher returns that far exceed the going rate of the precious metal. Next is the liquidity, which is more consistent than selling physical bullion, because when you sell a stock, you know the asking price and you know what you're going to be getting for it. There's also a large breadth of precious metals that you can invest in via stock. Everyone has access to invest in uranium and lithium via the stock market. And as for the cons, a company can go bankrupt and lose value much quicker than the actual commodity, because companies can be mismanaged. And then there's also large amounts of volatility with owning the stock, because the stock price is still dependent on the supply and the demand of investors in that stock, not the commodity that they're refining. Now I'll move on to showcase some of the better performing stock that you could own in this space. The first is Harmony Gold Mining Company with the ticker symbol HMY, where it has been around since 1950 and it is based out of South Africa. And in looking at their performance, their P/E ratio is lower than the market, which may make it a value proposition. And the performance year to date, 1 year and 5 year has been doing quite well. I need to point out that these numbers are cumulative returns and not average annualized returns. And another precious metal company that's been performing well is DRD Gold, with a symbol of DRD. They happen to be over 100 years old, and they're also located in South Africa, where they make it a point to collect precious metals from surface gold located in tailings retreatment. Tailings is a slurry of soil and water that's left over from hard rock mining, and this company is retreating this slurry and capturing precious metals while removing the toxicity of the remains from the hard rock mining. They are essentially doing two things at once, and they're getting paid for it. And when you look at the healthy dividend, the P/E ratio, and the multi-year performance, it's been a solid performing company in the precious metal space. I like that even though it's over 100 years old, the company has pivoted from traditional mining and gone to surface mining and retreatment of some of the toxic remains left from the traditional mining. As we move on, I know that many of you aren't keen on investing in specific companies, and that's completely understandable. That's why I'll now be going over the benefits and the options from investing in exchange-traded funds focused on precious metals. And I don't think that I need to explain the risks and the benefits much on ETF, because I believe that most of you are aware that it comes with the similar benefits of investing in a company stock, but with the diversity across many companies. But regardless, let's break it down. Here's some of the benefits of an ETF where the returns could be much higher than the precious metal bullion because it hinges on the company performance that are in the fund. Next, the liquidity is high and your returns are more consistent than investing in physical metals. And the last major pro is the diversity in an ETF is spread across several different companies, and that gives you a buffer from risk. And moving on to the list of cons is very similar to company stock, where there is volatility over and above precious metals because it is based on the management of specific companies. And another con is that it may perform lower than some specific company stock, because of course it's diversified across several companies. And with that covered, let's go over some of the best performing ETF. And of course, at the end, I'm going to recap all of these together. The first precious metal ETF that I'll mention is the ABRDN Physical Gold Shares ETF with a symbol SGOL, where it is meant to index and reflect the performance of physical gold. And when you look at the performance, it has no P/E ratio because it is investing in physical gold and not in companies. But when you compare the multi-year performance, it is slightly different from physical gold. And I'm not sure if that's due to me looking at different sites to track the performance or not. But I would expect these to be nearly identical. And with it tracking a commodity, the expense ratio is low, but I think it should be even lower than this because, once again, it's just a commodity. But overall, this is a great, easy way to invest in near physical gold, but without the risks of trying to sell to a pawnbroker or a gold dealer. And before I mention the next ETF, remember that I'm going to provide a comparison of all of this at the end. And the next ETF is the Global X Uranium ETF with a symbol URA, where they target uranium mining and the production of nuclear components. And when you look at the performance, I'll be honest, I was a bit surprised that the dividend wasn't higher, but the returns have done very well compared to gold and the S&P 500. Overall, this is a very solid performing ETF where I expect it to continue to grow and do very well, up until we figure out nuclear fusion. And with all of those covered, now let's see how the ETF compare with the individual companies, the S&P 500, and gold itself. Of all these that I spoke to, The individual company of HMY had the best returns, and then the ETF for the uranium sector came in second. And if you are curious, I did look up silver, palladium, and lithium specific companies in ETF, but at the end of the day, I wasn't able to find any that had as good a performance as what you see here. And as always, if you know of any stock or ETF that maybe I missed or overlooked, please feel free to share those in the comments section so that others can see them and research them on their own. Thank you so much for watching.